Is gold an investor's dirty secret? If so, why? The better question is, do we actually buy gold, or are we actually doing something else? Find out that and more in this video. When weighing the cost of living, inflation, fluctuating interest rates, and the ever-growing national debt, it becomes more and more challenging to know if you are meeting your retirement goals. How can investments in scarce assets like gold and silver, or decentralized assets like Bitcoin, be used to counterbalance this constant erosion of our savings and purchasing power? If you think you may be falling behind, see the link in the video description to access the free Inflation Retirement Calculator to make sure that you are on track. Be sure to stay until the end of the video, where we will give you 2 wise investment options, each with their own set of advantages. To discuss why gold works, why fiat currencies ultimately fail, and why gold and other scarce assets act as an insurance policy against risk, we will hear from former Congressman and activist Mark Finchem, economist, White House advisor, and author Jim Rickards, and economist and investor Keith Weiner.
Interest is the one thing that will pull gold out of private hoards and into circulation. People have been hoarding gold for at least 5,000 years. They've been hiding it from their governments and from their neighbors. Traditionally, this was the sort of thing that fathers didn't even tell their kids until on their deathbed. They would summon the oldest son and say, "Son, we have 10 ounces of gold. It's under the kitchen floorboards, under the stove," or whatever they would do, because it was so dangerous. I mean, the government could take it. The government could declare you to be a criminal or a traitor. Your neighbors could come and steal it or slit your throat in the middle of the night. It was just the sort of thing nobody wanted to talk about, nobody wants to acknowledge having. And the thing that will pull it out is interest.
But I know billionaires, I know prominent hedge fund individuals. I don't know one of them who doesn't have physical gold. Now, they won't talk about it because they're out there buying and selling stocks all day. They've got home vaults, et cetera. The answer is I do recommend physical. For the reason I mentioned, which is, take COMEX, for example. So I own gold futures on COMEX or whatever. Well, if all the longs demanded delivery, it would bust the warehouse. There's not enough gold, and there isn't. But what would the exchange do? The exchange, the governing board would have a meeting. They would say, we're ordering what's called trade for liquidation only. Trade for liquidation means you can roll your contract, or you can also, like if you're long, you can sell, but you cannot take physical delivery. And they say, I read the rule book, because I have read them. The exchange says we are not a source of supply. The only reason they allow physical delivery at all is to kind of keep the basis honest. But if enough people ask for physical gold, they'll say you can't have it, right? They'll say trade for liquidation only, or they'll shut down the contract. They'll send you a check for the close of business yesterday, but meanwhile today the gold's up $500 an ounce. You're out of the game because we closed out your contract. And they can do that. This is all in the rule books. Same thing with these unallocated gold contracts. They have force majeure, they have early termination, they have material adverse change clauses, all the legal stuff that no one ever bothers to read.
Let's shift gears from gold to silver. The U.S. Mint, when they minted this in 1883, this is a Morgan silver dollar, but it was worth a silver certificate. If this wasn't money, then why was this redeemable for this? It was a promise to pay, promise to exchange. That's where the whole exchange versus buy thing, we exchange one for another. Now, the fact that this is now worth on the open market, anywhere from 20 to 30 bucks depending upon condition. At the end of the day, I exchanged this for a $20 bill with somebody else. Anything that goes above that, if it's worth $35 today, this didn't gain value. It's still worth 20 bucks to me. What happened is there's $15 in inflation that happened since the time I acquired this, and I should not be taxed on that. There's this notion of an unjust gain. Really? That's when money's owned by the government and lent to the people. That's not our system. Our system is we own the money and we willingly, sometimes, give it to the government to do certain things.
What the tax does is it doesn't prevent people from buying the gold. If you go to a federalreserve.gov website, they talk about their policy target for the dollar is 2% debasement per year. Well, there's a risk that they overshoot, and that's why people choose to protect themselves, not to get a gain in gold, but to simply avoid the loss in dollars.
I was actually the last class to study gold in a monetary context. I got a graduate degree in international economics in 1974, and that was right at the very tail end of the gold standard. Everyone says it ended in 71 when Nixon went off gold. Not quite. It took the IMF a few years to actually demonetize it. If you're younger than I am and you know anything about gold, you either went to mining college or you're self-taught, because they simply stopped teaching it. So now you have this, Gen X, millennials, and perfectly bright, great schools, great degrees, high IQs, who know nothing about gold. They stopped teaching it. But they think they know about gold, and they'll just hammer you. It's like There's not enough gold in the world to support world trade. That's not true. Gold has no yield. It's not supposed to. It's money. You know, pull a dollar bill out of your wallet and look at it really hard. It doesn't have any yield. It's not supposed to have yield. It's money. People go, oh, I can stick it in the bank and get a yield. Well, yes, you can. But now it's not money anymore. Like the Fed would like you to think it's money because they're in the game of propping up that particular illusion. But you're an unsecured creditor of a bank. Just talk to people in Cyprus and Greece and elsewhere around the world about money in the bank. I'm not saying don't have money in the bank. I'm saying understand that it's not risk-free. To get any yield, you have to take some risk. So a paper dollar and a gold coin are both forms of money. Bitcoin is a form of money. Not one of them has yield. They do not have yield. They're not supposed to. They're units of account, mediums of exchange, store of wealth.
If you say to somebody, lend me your gold, I'll pay you 0, then the answer is, I don't have any gold. If you talk to somebody and say, lend me your gold, I'll pay you 5%, semi-famous incident involving J.P. Morgan around one of the banking panics. And somebody comes up to him and says, Mr. Morgan, there's a crisis in New York. There's a shortage of gold. What are we going to do? And so he said, raise the interest rate. 4%, he said, we'll draw it off the continent. And you think about in those days, steamships and the cost and risk and time to get gold from Europe to New York. Then 5%, he said, we'll pull it down off the moon. And so what he was doing was, first of all, illustrating the principle that interest draws gold into the market, and secondly, bracketing it and saying 4% is hyperbole, 5% is fantasy. And so interest is the thing that makes the gold flow.
This didn't gain value. It's still worth $20 to me. What happened is there's $15 in inflation that happened since the time I acquired this. So you're going to tax me $15, tax me on the $15 difference between these two from when I acquired it to when I want to exchange it back to these. And really, this is the collision, again, of two ideologies. One that the government owns the money and the other that the people do. Retirement is not a Republican or a Democratic issue. That's an every person issue. And if we're not protecting what people are investing in today, whether they are exchanging dollars for gold or exchanging dollars for something else, a house, those things, when people go to retire, if we don't have the right monetary policy in place, the government's taking their retirement.
Gold holds a proven, time-tested track record as an economic constant that spans millennia. Why is it important to have an economic constant? What is the main question every person planning their retirement or building a business needs to ask themselves? Are we growing wealth or losing wealth? And how do we measure this? Gold is that tool. With a 5,000-year record that has withstood every economic business cycle, stock market booms and busts, global conflicts, and outlasting every faith-based fiat currency, gold is no one's liability. It builds wealth while preserving it. Owning physical gold and precious metals requires responsible sourcing of grades, purity, condition, the best prices, transparency, and most of all, security and storage. Gold IRAs are a tax-deferred means of owning physical gold and ensuring all these investing principles are met. We have reviewed and vetted the best gold IRA companies that meet all these requirements. See the link in the video description to access the free gold investment guides. An often used criticism for holding gold is the opportunity cost of gaining yields elsewhere, such as bonds or high-quality equities. Monetary Metals is a gold investment company that unlocks the productivity of gold by offering a yield on gold paid in gold. Monetary Metals delivers interest on gold through the company's gold fixed income investments, which aim to provide a fixed return with low risk of loss. This provides investors exposure to gold's unique attributes, plus a real yield that grows your total of gold ounces held. To learn more about Monetary Metals and their innovative investment products, see the link in the video description. If you enjoyed this video content, be sure to like and subscribe so you don't miss our next video. If you have $100K of retirement savings to protect and want to take advantage of the best gold prices, see the link in the video description to sign up for the free Gold and Silver Web Conference hosted by Augusta Precious Metals. Thank you for watching.